information presented on this program and by its guest is believed to be factual and up-to-date, but we do not guarantee its accuracy and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information and may not be suitable for members of the listening audience. A professional advisor, attorney, or tax professional should be consulted before implementing any of the strategies presented.
Are you retired or getting close? Welcome to Retirement Lifestyles with Patrick McNally, where it's all about having the health, wealth, and freedom you need to live your dream retirement. Are there challenges on the way? You bet. Inflation, the economy, and the ups and downs of today's markets will try to rob you of your dreams. But take heart and take notes, because what you're about to learn will put you on the winning side of life for the rest of your life. Now, here's the host of Retirement Lifestyles, Patrick McNally.
Good morning, Reading. Good morning to the North State. Welcome to Retirement Lifestyles. This is the show where it's all about having the health, wealth, and freedom to live your dream retirement. I am your host, Patrick McNally. With me, as always, my friend and fellow financial advisor, Mr. Rick Comerick. How you doing today, my man?
I'm doing pretty good. I got my shorts on, and it's a beautiful day out there. But really what I want to hear is how you're doing, and how did your week go?
Man, my week was one of the best weeks I have ever had.
Wow. Okay. Tell us more.
I'm going to tell you a lot more. In fact, I'm probably just going to take a segment and talk to you about it. So I'll just kind of tee it up a little bit. You like that?
I think I got a little clue. I got a little clue.
I didn't even rehearse that.
Right.
I'm going to tee it up a little bit. If any of you guys out there are golfers, you know I'm a golfer if you've listened to the show before. Kind of a ridiculous obsession and addiction.
Right.
But you know what's going on this week. It is the week of the Masters golf tournament, and this is really one of the pinnacle events. If it is the pinnacle event, in my opinion, of the golf world. And I got to be there this week.
Wow. Now, do they do it every year? Or
they do it every single year.
Okay.
Always in springtime and April.
You go every year, right?
No, I don't.
Why not?
As a matter of fact, because you have to win it by lottery.
Okay, so you have to be chosen.
You have to be the chosen one. And
All
I've been trying to be the chosen one, Rick. I kid you not, for 20 years.
20 yeyears, and your ticket has never been drawn until this year, 2025, you got to go.
No, in fact, I didn't even get drawn.
Okay.
One of my best friends, he knows people who are members at Augusta National, which is the golf course in Augusta, Georgia.
Sure.
And the member said, "I'm not going to be able to be there this week.
Wow.
Do you want my tickets?"
He probably had to think about it a long time before he responded.
Yeah, for about a third of a second.
Right.
He said, "Yes, please."
Right.
And I was just one of the privileged, three other guys.
One of the plus one, plus
call.
two. Yeah.
And yeah, I've got some stories. Would love to share them because I'm still on cloud nine. I got back literally last night at 10 o'clock our time. Late. And so I'm kind of still running on this high right now. So we'll chat a little bit more about that also. But we do want to talk, Rick, about the market. The market has just been a roller coaster ride.
Right.
So we're going to talk about that. Thank you so much, Rick, for preparing for the show. And you got all kinds of charts and stuff there. We're going to nerd out really good on that, but also talk about some planning and some stuff on my mind about dividends versus like the 4% rule. So I know we'll go into all of that good stuff as well. So, folks, if you got questions about your financial planning, Rick and I would love to hear from you. I want you to visit patrickmcnally.com. In fact, I've got all kinds of cool checklists, reports, and things on there. You can become part of our retirement inner circle and get tips and strategies through the email, and I send out anything that gets updated. Just go to patrickmcnally.com. You can sign up for that. But we're going to take a quick break, and we will be right back and launch right into the show.
You're listening to Retirement Lifestyles with Patrick McNally.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. all the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. Are you one of the 77 million baby boomers ready to claim what's rightfully yours? That's right. I'm talking about Social Security. You paid into the system for 40 years or more, and now it's time to collect. If you're like most people, you may have some questions or even feel overwhelmed and confused. After all, the claiming strategies vary, and choosing the wrong one could end up costing you hundreds of thousands over a full retirement. And the worst part is, you may not even know what choices you're missing. If you want to maximize your benefits and feel confident in the decision you make, let my team run a Social Security benefits analysis for you. We'll show you multiple strategies so that you can make the best decision for you and your family. For more information and to request your own Social Security analysis, visit patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. Thanks for joining us. This is Retirement Lifestyles. I'm your host, Patrick McNally. With me, Mr. Rick Comerick. Rick, I'm kind of reeling, man. I'm on high after one of the most amazing weeks I've ever had in my life. I just got back late last night from Augusta, Georgia.
Right.
And if any of you out there are golfers, you know what's going on right now in Augusta, Georgia, the Masters Golf Tournament. And you guys have heard me talk about being a golfer and kind of this ridiculous obsession I have. Been a golfer pretty much all my life, played in high school, and I have been trying for literally 20 years to get tickets to this tournament because you have to be drawn. It's a lottery system, and I've never been drawn. And a buddy of mine was able to acquire some tickets and was kind enough to give me one of them.
Wow.
And a dream realized for sure.
Now, how many games do you watch out there?
So a traditional golf tournament is 4 tournament days.
Okay.
Thursday through Sunday.
Got it.
And what happens is the players they compete for the first 2 days, Thursday, Friday, and they have to make the cut to get to the weekend.
Okay.
And that's kind of their big deal is like, hey, play well enough on those 2 days, get to the weekend to have a shot.
Now, did you get to watch all 4 days, or was there certain days that you would go?
No, so the lottery system, you basically get what you get.
Yeah.
And we actually got what was called the practice round day on Wednesday.
Okay.
And to be honest, I've been to a number of golf tournaments. You know, being born and raised in San Diego, I've been to Torrey Pines numerous times, saw a bunch of tournaments there. And a couple years, after going to those tournaments, I went out there on the practice round day, which is Wednesday, and I love that because for a few reasons. Number one, there's not even close to as many people on the grounds as the tournament days, especially on a Sunday.
You have more access and more visibility and things.
Absolutely. And
nice.
Sunday, I've been to tournaments on Sundays, and it's actually not very fun.
Okay.
Because you're 20 people deep.
Oh, wow. Yeah.
You can barely see the players, that kind of a thing. So Wednesdays, you can actually get a little closer to the players. You can follow them from tee to green if you want. But at the Masters, just being on the grounds, they opened the gates at 7. We were there at 6.
Oh wow! Yeah.
And we were probably, 1,000 people deep.
Oh wow!
And we thought we were early.
Yeah.
And they opened the gates. It feels like Disneyland when they open the gates. You funnel through this tunnel, you go through security. And then you're just on golf's hollowed ground.
Right.
Honestly.
Wow.
The history there, all of that stuff. And Rick, the property itself, the grass, is so there wasn't a blemish on anywhere. Not only the golf course.
Yeah.
Just anywhere on the grounds. It is so meticulously maintained.
Wow.
The people are so friendly, accommodating, all the stuff. And once we just got out onto the golf course, you're looking at this grass, and I'm not kidding you when I say it looked like artificial turf.
Okay, sure. It's just so uniform and
that,
whatnot.
It's that uniform. It's that perfect of grass.
You're like, is this real?
I mean, I almost was like a kid. I'm like, I just want to lay down and roll on it,
right?
And just like kiss the grass. It's that silly. And we were able to, go to the driving range and watch the pros warm up, the chipping green, the putting green, and then we got out on the golf course and watched some of the guys tee off on the first hole. And you see these holes, and it's like you've only seen this on TV.
Okay.
And you actually see how the contours of the course, the walking. We added up our steps, and on Wednesday alone we walked 17 miles.
Oh wow. Yeah.
We walked the entire golf course, multiple holes each time.
Yeah.
And just the hills that you don't, the TV does not do it justice.
Yeah, you can't tell the contour on TV.
No.
Yeah.
The drops, the greens, the everything. And so we got to see the top players in the world up close. Some of them would interact with the crowd. Like I said, on the practice, it's not as crowded, so they get a little closer.
And not as much pressure on them, so they're probably a little more open at that point.
And what I love is because I love to pick up on tips for my own game. The interaction between the players and their caddies.
Oh,
it's a practice round, so they're out there hitting shots from multiple areas.
Okay,
they'll walk into the trees and be like, okay, if I hit my tee ball over here, what's going to happen? They'll drop a ball and hit a shot.
Okay,
and then on the greens, they know where the pins are going to be on Thursday, Friday, Saturday, Sunday. So the caddies would have these coasters, and they would put them where the pins are, and they'd hit putts from all the different angles.
Okay.
And then you'd see them taking notes. Do not hit your ball here on Thursday.
Right.
Do not hit your ball here on Sunday.
Yeah.
Make sure you're doing this.
Yeah.
It's cool to watch them do all that and then hit these different shots, and it's like you get giddy. It's like my wife was teasing. She's like, "You're like a kid in a candy store right now, aren't you?" I'm like, "Yes, I absolutely am."
Oh, wow.
And I went one step further, and I bought a flag, one of the flags you can on the flag sticks. Well, you can buy them in the gift shop. So I bought this flag. It's probably 2 feet by a foot, and my buddies were making fun of me. They're like, "Are you going to be like an 8-year-old? You going to be asking for autographs?" I go,
right.
"Absolutely. All pride aside."
Yeah.
And I found what I kind of termed like a little honey hole, where the players would come off of one hole to walk to another.
Yeah.
And it was kind of bottlenecked.
Okay.
And so they'd come right past you.
Yeah.
And I just started getting autographs.
Yeah.
And by the second autograph, my friends were like, "Are you kidding me? You got Rory McIlroy? Are you joking?" I'm like, that's his signature right there. Are you kidding? You got Victor Hovland? You got Tom Watson? So I started just racking up names.
Yeah.
And I reserved one spot on the very top of the flag for my man, the guy. I've never seen him live.
Okay.
It's the first time I've seen him live.
Yeah.
Bryson DeChambeau came off. He was the last group to come off. And I'm like, "Bryson, I reserved this spot right here for you." And he goes, "Dude, that's awesome." Absolutely. And he walks over to me and he signs this thing.
Nice.
And he's like, "Thank you so much for coming out. Have a great time."
Yeah.
Oh man,
wow.
I was like a little girl.
Right.
Like I was like,
He talked to me.
He talked to me. You want to be friends? I was like, oh my gosh, it was so cool.
Neat.
Amazing experience. One of those huge bucket list items.
Yep.
Check mark. Check it off. I mean, I'm still going to put in, for the lottery and hopefully go back again.
Right.
But
you've been.
I spent a ridiculous amount of money in the gift shop on hats. I got 2 hats, 3 golf shirts, a hoodie. Yeah. I mean, all this stuff. And so it was one of those weeks that was super, super special.
Nice.
And I will never forget it. So
That's great.
I'm glad I got to share that externally process a little bit. And lots of memories and lots of fun times. So
Retirement Lifestyles is all about the health, wealth, and freedom to do the things you want to do in retirement, and you got to experience it also before retirement. So that's great.
So good, so good. All right, hey, so that I wanted to dedicate one segment to some stories and had a lot of fun. When we come back, we're going to get into this stock market. A lot of you obviously know market's been up and down. It's been a rough week, or probably I'd say a rough month. And we're going to talk about that, talk about, do you need to be doing stuff? Do you need to be making changes? A lot of thoughts, Rick, people are asking that question. There's an anxiety out there. And we're going to talk about some of those numbers and give you some tips and strategies on what you should be doing. So we'll be back in 2 minutes.
Don't touch that dial. Patrick will be right back.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. You've heard me say it's all about having the health, wealth, and freedoms you need to live your dream retirement. When it comes to the health side, I want to tell you about my family's personal chiropractor, Dr. Todd Royce, owner of Chiropractic First. Not only does he adjust us and get us back to our active lives, he teaches us about ongoing nutrition and living healthier. If you have any pain or stiffness in your back or neck, I want you to call Chiropractic First today at 243-0889. Mention Patrick for a free consultation. You don't need to live with pain or discomfort anymore. Call Dr. Todd at 243-0889. Or visit online at chirofirst.net. Patrick McNally here, owner of Retirement Lifestyles Advisors. I want to take a couple of seconds and talk to you about annuities. Depending on what you've heard, annuities can be good or bad. In my opinion, it all depends on what kind of income you want. Do you want a guaranteed pension income that will never run out as long as you live and isn't affected by the stock market? Well, an annuity might be good for you. Do you want an income stream that will continue on to your spouse if you check out on life before they do? An annuity might be right for you. But you need to be careful. There are some insurance people out there who don't have your best interest at heart. That's why you should talk with an income planning specialist that can answer your questions and discuss all of the pros and cons of annuities. I'm here to help. Visit patrickmcnally.com to schedule a free, no-obligation strategy phone call. Go now to patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
All right, guys, welcome back. Let's launch into this, Rick. Let's talk about the roller coaster ride of the stock market. It has been up and down, crazy the last couple of weeks. You wake up one morning, it's down 800 points to start the day, and then maybe it ends, it ends 1,500 down or it ends a couple hundred up. I mean, we had literally almost a 3,000-point one-day gain.
Right.
And what day was that again? That was Tuesday.
Probably Wednesday.
I think it was Wednesday.
Yeah.
And then down again, and then up again. And so all this stuff, so it's got people going, oh my gosh, I'm pulling my hair out here. Do I need to be doing something to my portfolio? Let's go over some of these numbers and chat about that a little bit.
Yeah, let me go ahead and paint a picture coming off of last week. Last week, we had some significant drawdowns in the market. We talked about that last week, looking at Thursday and Friday and such. So coming into this week, Monday exhibited extreme turbulence in the first session with above average trading volume. It dipped down into bear market territory during the first point.
Which is what? What is bear market territory? What's the definition of that?
Yeah, that's 20% below its recent peak. So we got to that level during that day on Monday. So everybody's, yelling and screaming, hey, we're in a bear market, right on that Monday. However, the market then surged and it actually ended up on Monday. So even though people were yelling, bear market, whatnot, during the day, it ended up on the day. We go into Tuesday. Similarly, it was another volatile session. There was strong rally right out of the gate on Tuesday, and so the markets were up. However, they ended the day in negative territory. So it was kind of vice versa as opposed to Monday. Then we come to the Whopper, and you've alluded to this already. On Wednesday, it was a huge day for stocks. The NASDAQ soared nearly 12%. The S&P spiked up 9.3%, and the Dow Jones bounced nearly 3,000 points.
It's unreal.
As you have mentioned. And so I don't ever recall a day like that. And, some of the implications for buyers and sellers, I know we're going to get there as we go, but if you're trying to time this market, I would say this week is a quintessential example of how that could be folly, because during the day you see these swings, and then from day to day we've seen massive swings where one day we're down, i.e. Monday, Wednesday we're up, Monday we're up, Tuesday we're down, Wednesday we're back up on a massive scale on that.
So I think you hit it on the head. It's like if you're trying to time this market, which a lot of people try to do, they're like, hey, I'm gonna hop out. Is this thing gonna keep going down, 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 down? And then the very next day, boom, it's right back up. So at the end of the day, should you be doing something with your portfolio? Rick, I'm going to say no. You should not be doing something drastic with your portfolio right now. You should stick to a plan, whatever that plan is. For our clients, we have them in what's called a dividend portfolio. And I want to go into a lot of detail on this, kind of that difference between a traditional dividend portfolio versus what a lot of people own, like with ETFs or mutual funds, like in their 401ks, stuff like that. If you are already retired or you are getting close, you're in a completely different time of your life when it comes to how you should be setting up your portfolio. Now, when you're working, you're in your 20s, you're starting off, all the way up into your 50s, stuff like that. You're going after growth. You want to see that growth, year over year, grow, putting money in, money coming out of your paycheck, all that good stuff. Well, when you get to retirement, you need income now from your portfolio. You're not getting income from a paycheck from a job. You need to create that income along with all the other incomes that you're getting. Rick and I believe that a dividend portfolio is the most appropriate and the best portfolio for that, and even, Rick, in times of market volatility.
Yeah, and that is definitely what's been playing out during this time of market volatility, is that these more conservative-oriented, profitable companies with good balance sheets, although they're being affected, there's no doubt about that, they are weathering the storm on a much more advantageous basis.
Yeah.
And so that's pretty cool to see. I know we're getting ready for our halfway break here pretty soon. So I know we've got some other comparisons to draw. I'll highlight the Magnificent Seven and what's been going on with them, because they've been a driver of the market the last year or two, and we can kind of compare that with a more, even-keeled, balanced strategy.
Just kind of a tease, though, before we go to the break. With this difference between a dividend portfolio and kind of your traditional growth portfolio like ETFs and stuff, Rick, wouldn't you agree that a dividend portfolio is not going to, like you mentioned, it does go down because the markets are going down. It doesn't go down as much, we've seen.
And the beauty of that is, one reason is because a source of your returns are those dividends, which don't automatically go down when the market goes down. As a matter of fact, many of these companies maintain or even increase their dividends during this time, so that offsets any, price drop that may occur.
So we'll explain that, because a lot of people might be scratching their heads going, wait a minute. If they're increasing their dividend, doesn't that mean that they're increasing my paycheck from the dividend? Yeah. The answer is yes. They're actually giving you an increase in pay, even though the stock itself might be down 5, 10, 15%. And people go, why the heck would they do that? Yeah. Well, we'll answer that in the next couple minutes. Guys, we're at the halfway point of the show, and this is when I want to tell you about my updated 2025 planning checklist. I'm sure you know that retirement involves a lot more paperwork and deadlines than most people realize. These checklists give you the guidance you need on taxes, Social Security, Medicare, retirement account distributions, year-end tasks, and more. It compiles multiple deadlines and tasks in a simple-to-read format to help you see at a glance what needs to be done and when. The checklists include key financial and tax data, the retirement calendar checklist, key planning and investment deadlines, the Medicare quick reference guide, and much more. As a thank you for listening to the show, I put all of these into a bundle that you can download for free. That's right. No cost, no obligation. Simply visit patrickmcnally.com and click on the 2025 checklist bundle. That website again is patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show, guys. This is Retirement Lifestyles. I'm your host, Patrick McNally, with me, Mr. Rick Comerick. Hey, if you haven't done so already, visit patrickmcnally.com. I want you to join the inner circle. You may have heard, I think there was probably an ad during the break there about it, but go sign up. It's free. If you want retirement tips, you want strategies about portfolios, about budgeting, about all things retirement, estate planning, I will send you emails each and every week. You'll also get updated charts, checklists when things change in the taxes each year. You'll have that about Medicare, about Social Security, all that good stuff. Anything and everything retirement, I will send out to you. Like I said, it's free. Join the inner circle. Rick, let's get back in here talking about the market, the ups and downs. We left off kind of teasing about what's cool about a dividend portfolio versus a traditional dividend portfolio versus what a lot of people do, which is a growth portfolio, which is ETFs, mutual funds, things that you're used to when you're working. You know, you have a 401k, let's say, at your job. You're putting money in. You know, part of your paycheck's going into that. You're building this thing up over time, which is what you want to do. Max out that thing as much as you possibly can. You want growth. You want to see this market go up, and it does. Over time, the market goes up. In times like this, volatility, people often think, should I be doing something different? And the answer is no. Quite honestly, you should be putting more money in when the market's down. That's the time to buy. That's when the deals are happening. That's the old half-price sale at the market. You know, that's when you go buy, is when it's down, because it will come back. Now, the difference between that and a dividend portfolio, Rick and I, we believe that a dividend portfolio is the best portfolio retirees can have because its focus is income first, growth second. The reason, Rick, is because when you have a dividend portfolio, you own the stocks directly. So you can separate out the growth, the stock appreciation or the depreciation from that dividend if you choose to do that. And for retirees, that's a smart thing to do because that's an income stream. Those dividends are a share of the profit of the company. When you own that stock directly, you are an owner of the company. You deserve to get paid. Well, you're getting paid for not doing any work. That's the beautiful part about owning these stocks. The other cool thing is that in times of market volatility like this, dividend stocks tend to not dip as much. It's much more smooth, Rick. It still could feel like a roller coaster, but it's like the baby roller coaster. It's not the Six Flags Magic Mountain stock, roller coaster that a lot of people feel, say, with those ETFs. Why is that?
Well, one reason is because these companies that pay a dividend are companies that have decided that they are, sound financially speaking, such that they have all the income to run their operations, to, produce their goods and services, to reinvest into research and development, and they still have extra cash left over from all of those earnings. They pay out some of that, not all of it. If they paid it all out, they couldn't do those other things. But they have enough to where they have solid financial balance sheets such that they can return some of those earnings to their shareholders in the form of a dividend. That dividend is a cash payment direct deposited into your brokerage account.
Which is good stuff right there. I love dividend payments. It's mailbox money. My grandpa used to call it mailbox money.
That's right. Yeah.
Because he'd get, 5 or 6 dividend checks every single month.
Yeah.
That was income.
Exactly. And now we have direct deposit, and so it's just direct deposited into your account. Now, these direct deposits of dividends, they typically don't change that much. Typically, the board of directors announces what the dividend will be, say, on like a quarterly basis. And generally speaking, when they make that announcement, they hold to it for that quarter. And then the next quarter, they make the next announcement. And they say one of 3 things. We're going to continue the dividend with no change whatsoever, or we're going to decrease the dividend, or we are going to increase the dividend. That's generally what they do.
One of 3 things there, and we know that ahead of time.
Right.
Which is the good part. Rick and I, we have access to these board meetings, and we get these alerts like, hey, company XYZ has come out with their next quarterly reporting, and they have said, you know what, we're doing just fine, we're going to keep it the same. Or They come out, and this is what we want. And in fact, Rick, this week alone, I had 3 companies, alerts, that came out and said, we're going to raise your dividend. And it was anywhere from 3.5% to 6% between these 3 companies. And that makes a lot of people scratch their heads and go, well, wait a minute. Isn't the stock price down right now?
Right.
Why would a company, when their stock price is down, the market's in turmoil, if you listen to the media, why would they give us a pay raise? Because that's literally what it is.
Yeah.
You are literally getting a pay raise in your dividend payments. And the best way to look at that is these companies, like Rick said before, these companies who they've been paying dividends for 25, 50, 100 years. They're going, okay, guys, this is not our first rodeo.
Right.
We have seen the markets do what the markets do. Yeah. And guess what? People are still buying our products, no matter in good times and bad. I want to be careful and not mention companies' names.
For sure.
We don't want to give financial advice like that. And if you're thinking about a portfolio, go talk to your advisors. Don't just run out and do something crazy and make all these changes. Talk to your advisors about that. But when a company comes in and says, hey, look, we've been through this stuff before. We don't want you to sell. We don't want you to panic and then just sell all your shares.
Right.
Because that's what a lot of people forget, is that when the balance goes down, yes, it's a loss, but it's a loss on paper at that point.
Right.
You don't actually realize that loss until you sell your shares.
Right.
So that's why you don't want to sell. In fact, we would say that is the time to buy. For a lot of our clients, it's a half-price sale, man. That's if they're reinvesting those dividends, because that's what you can do. You don't have to take the dividend as cash and spend it. You can take that dividend and you can say, you know what? Our income is fine. Let's reinvest that back in, and now you're buying shares that are even cheaper. They're worth more value because of the yields. We can, we're not going to nerd out too much, but they're actually worth more value at that point. And then when the price comes up, well, that's what it does. The growth will come back over time.
Right. Yeah, exactly right. So we've got 2 sets of people here. We've got the retirees who can use those dividends as part of their income. And then we have the pre-retirees who can reinvest that income into their account to purchase a greater quantity of shares than they otherwise could, because the price is lower at this particular point.
Now, we would say the opposite of that is somebody who is investing the same way in retirement as they did, say, when they were 35 years old. Just like they did with their 401k. They had access to different funds, ETFs, things like that. Well, in that type of scenario, if you need income from your portfolio, you actually do have to sell.
Right.
No matter what the market is at.
Yeah.
You are selling shares.
Yeah.
So in that instance, you are locking in those losses.
Right.
So if your portfolio, say, is down 10%, but you still need 4% as income to live on, well, you're not down 10, you're down 14.
Right.
And so when you think about what has to happen for you to just get back to break even,
right.
A lot of people say, well, I just need to get 14%, right? No. You got to get over 20.
Right.
That's the cruel math of the market.
Yeah.
Is that now you are in a less of a position to let the market do its thing coming back. You got to get more than you lost in order to just break even. Well, for retirees, that could be a catch-22, because they may not earn that back in that year again.
Right.
But what happens the next year, Rick? They still need income.
That's right.
So they could be down. And that's why we believe that in retirement, a dividend portfolio is much more predictable, much more consistent, much more stable than a portfolio that you have to sell in order to get your income, which, Rick, a lot of people, that's what they do.
Right. Yeah.
So when we come back, we still got some charts and some graphs and some nerdy stuff to go over, but we're going to continue this conversation so that hopefully you can gain some tips and things you can be doing with your own investments, give you some things to think about. And when you have a plan in place, when you understand what's actually going on with this market, you can make much better choices. It's having the information so that you don't let those emotions overwhelm you and you could make mistakes with your choices. We'll be back in a couple minutes.
Smooth.
You're listening to Retirement Lifestyles with Patrick McNally.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. You've heard me say it's all about having the health, wealth, and freedoms you need to live your dream retirement. When it comes to the health side, I want to tell you about my family's personal chiropractor, Dr. Todd Royce, owner of Chiropractic First. Not only does he adjust us and get us back to our active lives, he teaches us about ongoing nutrition and living healthier. If you have any pain or stiffness in your back or neck, I want you to call Chiropractic First today at 243-0889. Mention Patrick for a free consultation. You don't need to live with pain or discomfort anymore. Call Dr. Todd at 243-0889. Or visit online at chirofirst.net. Are you getting close to 65? If so, Medicare is right around the corner. And if it hasn't happened already, your mailbox is about to explode with Medicare information from insurance companies. Which company do you pick? What's Part A, Part B, Part C, Part D? Oh my gosh, how many parts are there? Is Medicare automatic? Is it free? Does it cover everything? These are just some of the questions we get all the time. If you want to cut through all the noise and learn the facts, visit patrickmcnally.com and download your free copy of my 2025 Quick Reference Guide to Medicare. You'll learn all about the costs, the enrollment periods, and so much more on this Medicare Reference Guide. Visit patrickmcnally.com today and request your free copy. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. Rick, let's keep going here talking about the market. We kind of came out that last segment talking about the difference between a dividend portfolio and a typical portfolio that most people are used to, which is mutual funds, ETFs, things like that, stuff like in your 401k. And Rick and I believe that in retirement, a dividend portfolio is much more appropriate because it's designed to pay income, which is what retirees need, versus needing to sell parts of your portfolio to get your income. And the problem with that is that if you do have 2 years back-to-back of a down market, well, you're down even more. It hurts even more because not only are you selling based on what the value of your portfolio is, now you're locking in the losses, but then you have to take that additional however much 2, 3, 4% extra that you need as income. So it's that much harder to make it back, for the market to make its way back. You don't need to get 10% back. You need to get like 15% back. And that to me, if you do that 2 or 3 times in a row, that's a recipe for disaster for a retiree.
Right.
And that's when a lot of people are like, geez, do I have to go back to work? We don't want that in retirement. But let's keep going with some of these numbers. So take it away.
So what we're going to do now is take a look at some kind of staying disciplined philosophy, diversification, some kind of fundamentals of investing through a long-term perspective. First is looking at the performance of the so-called Magnificent Seven. So those are, those stock companies that really shined during 2024 and 2023, for example, and really took a lead in that particular area. Now, you might be asking yourself, well, hey, if those are the best stocks in 2023 and 2024, why didn't we just go all in those, right? Well, one reason might be because in 2022, the year before, they were down 40%. So the Magnificent Seven was down 40% in 2022. The market as a whole, as shown by the S&P 500, down 20. So it was like twice the losses in the Magnificent Seven. So that's one reason why, nobody was saying, hey, let's go out and just buy the Magnificent Seven, right? Well, then 2023 2023 comes around, and they were up 76%. So they really drove the returns of the entire market that particular year. 2024, similarly, they were up 48%, so some huge gains there. Let's bring it to where we are today. Year to date, 2025, I believe this was as of day before yesterday, so Thursday is where we were at here. Market as a whole down 10%, Magnificent 7 down 18%. So again, almost twice as much exposure on the downside.
So much more risk.
So much more risk. So yes, there is growth to be had in, just a few companies for sure. However, if you're looking at concentrating all your risk there, you're going to see massive swings on the downside too, and have to be aware that that's why most investment advisors, in fact, I can't hardly think of any that wouldn't preach diversification.
Yeah.
That's a prudent investment principle, which is being diversified, which means not concentrating in just 7 stocks, but rather having a basket that covers all the different sectors, 10 different sectors versus
financials,
just the
commodities, real estate,
consumer discretionary and staples,
oil and gas,
utilities, things like that.
So you would agree that owning, like in our dividend portfolio, we would say, hey, own 3 or 4 companies in each of those sectors.
That's right. Yeah.
And you end up owning 30 to 40 stocks or something like that. And the reason for that is because at any given time, we don't know which sector is going to do better than the other.
Right.
Oil and gas might be going through the roof,
Yeah.
and consumer discretionary might be down.
Right.
So you're not feeling that big swing of volatility.
Yeah.
Because it's almost like elevators, right? Like one's going up, one's going down, one's going up, one's going down. And so it takes away a lot of the risk. Whereas what you're saying here is if you only put all your money into the Magnificent 7,
right,
they're all pretty much in the exact same. They're all tech. They're all in the same sector.
Yeah, that's right.
So you are taking way more risk.
That's right.
Being all in.
Yeah.
Now, you hear the stories. Some guys knocked it out of the park. They got in when it was 23, when it was down. And then it shot up, would you say, 78%, like in 1 year?
Yeah. It was 76% up in 2023. Yeah.
Now, the only people that really got that right was Congress.
Right, could be.
I mean, they knew.
Right.
It's magical how they can time the markets. I don't know how that works.
Right.
So, but keep going here. Yeah. What else you got?
So, also, I mentioned this last week, and this is the annual returns and intra-year declines, right? So every single year, by the end of the year, we know what that return was at the end of the year. For example, last year, 2024, as a whole, the S&P was up 23%, right?
Pretty sweet year.
Yeah, pretty good year. At one point during the year, it was down 8%. The year before, we had a similar good year, 24% positive return at the end of the year. However, during that year, it was down 10% at one point during the year. So it kind of begs the question, where are we right now? And again, as of the day before yesterday, we were down about 10% for the year is where we were. And however, at one point, as we alluded to, I think in our first or second segment there, we had actually dipped into, 19, 20% territory in there. So,
and that's when the media is all freaking out saying, we're in a bear.
Right.
The bear's coming.
Right. Yeah. And so we hit that for part of a day, and then we came out of it.
And it came right back.
And we're like halfway out of it at this point, as seen by the S&P 500. So the important part here is that during the year, we should expect to see average declines of around 14% every year. Right now, we've seen a decline of 19%, and we've bounced back from that at this point. And about 3 out of the 4 years are actually positive years.
Rick, last week you gave us some amazing numbers when you said the average long term, and we're talking like 100 years of the market.
Right.
We see every single year a 14% decline.
Right. Yep.
And people they're like, we do?
Yeah.
Well, when?
Right.
Yeah, you didn't see it. You didn't feel it. You know, shut off the news.
Yeah.
Kind of a thing. Because the media's freaking out, and then we have a 3,000-point day. Rick, a lot of people, I bet you right now, are feeling like man, well, what's that market at? Is it down like 17, 18%?
Right.
Can you give us the numbers real quick before we go to this break on what it is as of market close on Friday?
Sure, absolutely. So what we have here is both the S&P 500 and the Dow Jones, and the S&P as of the end of the week, Friday, down 8.8%.
Year to date.
Year to date. This is our year to date numbers. The Dow Jones right around 5.5% year to date negative for the year.
So you think about that, the Dow Jones, that's the big number everybody sees on the TV, right? That's usually the one they show.
Yeah.
And that's the one people kind of monitor and go off of. 5.5% down.
Yeah, 5.5%.
That's barely a blip.
Right.
That's nothing to freak out about.
Right.
That's not even the average 14% down.
Yeah, it's not even the average down. It's not even correction territory, which is at 10%, and it's a far cry from the 20% bear that we talked about.
I mean, we can't predict what the market's going to end at this year, but like Rick says, you can have some of these times throughout the year where it's down 14%, and you end up plus 24%.
Right. Yep.
That's why we're telling you guys, don't be making rash decisions. Don't be making emotional decisions. That is hard. That is easier said than done. Trust me, this is your life savings we're talking about. But these are the conversations we have with our clients. We're like, remember our planning, and we go over these numbers with them. So that's why it's funny. Rick, a lot of people ask me, hey, Patrick, did you man, your phone must be just like ringing off the hook. Are just people flipping out?
Yeah.
No. Our people aren't, they don't call us. Now, we'll do a video and just kind of let people know what's going on.
We keep them updated.
But we do this all the time. We communicate with our clients, and it's the communication piece that I hope, gives our people that peace of mind that they're looking for. And I've been told that, like, thank you so much. We're not worried about anything. We're sticking to our plan. Oh, I love that. We got to take a break. We'll be back in a minute.
Don't touch that dial. Patrick will be right back.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. Are you getting close to retiring and starting to feel overwhelmed with all of the choices you need to make? Social Security, Medicare, estate planning, taxes, rollovers, and investing. It seems like a giant maze, and you're about to go in. We can help you. Head on over to patrickmcnally.com and check out all of our reports, checklists, videos, downloadable guides, and flowcharts, all designed to get you prepared and to stay ahead of the game. You'll be so prepared to retire, it'll almost be unfair. Don't be surprised if your friends and neighbors start asking you for advice. Don't wait, the time is now. Go to patrickmcnally.com, that's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
All right, guys, we're going to be wrapping this thing up pretty quick, Rick. Time flies when we're having fun, man. At the beginning of the show, I talked about my week, which was I'm still on high from. I got to go to the Masters golf tournament. If you're a golfer out there, you know how big that is because you have to be drawn in a lottery to even go. And my friend scored some tickets, and I was lucky enough to get one of those tickets. So we've had quite a week with that. But, yeah, the rest of the show, we were talking about these markets. And I think, Rick, to kind of wrap up everything we talked about with the data, with the numbers, is that the market is actually doing pretty just fine right now.
Yep, and the final piece of data I'll add to this is this volatility we're experiencing. You know, it's not fun. We don't like seeing the big swings. It's a little unsettling. However, the volatility index closed above 45, and historically that's very volatile. However, 1 year later, that every time that's happened, the market has been up 18% or more, and 5 years later, it's been up 100%.
Wow.
So when we hit these large volatility moments, it's not fun in the moment, and it certainly doesn't guarantee that the future will be higher. However, we can conclude that every time in the past when we've hit these huge volatile inflection points, the market has subsequently gone up a significant amount.
And we think, everything going on with the tariffs, everything going on, with this administration, what Trump is doing, what Doge is doing, we think it's all good. We got to get our money issues under control in Washington. But it's so interesting. The market is driven by news.
Right.
And so when it was kind of up in the air, like Trump's doing all these tariffs, oh my gosh, what's going to happen? We're going on a trade war kind of a thing.
Right.
Market dumps.
Yeah.
And then you start seeing some of these, these countries go, hey, we're on board. We want to do like 0 for 0 tariffs and all this stuff. And it's like, market comes screaming back up. It's just crazy.
Yeah.
All that to say, what is your plan? How can you keep your emotions in check? How can you relax during good times and bad? And that does tie back to how you're actually invested. And you talk about risk in the market, Rick.
Yeah.
One nerdy stat here. So the market itself has what's called a beta, and that's fancy for risk, of 1.
Right.
And so when you look at your overall portfolio, you can actually say, well, am I at 1? Am I above it? Am I below it? So if you're taking less risk, which our dividend portfolio takes less risk in the overall market, we don't see a lot of the big swings, or vice versa. If you're in the Magnificent 7, I don't even know what that is. It could be like a beta of 4. Who
Probably,
knows?
yeah.
But all that to say, look at your portfolio. If you got questions about that, Rick and I would love to hear from you. Go to patrickmcnally.com, schedule a phone call with us.